is a financial instrument that provides protection against unforeseen events or losses. It works by transferring the risk of financial loss from an individual or entity to an insurance company. In return for a premium, the insurance company agrees to compensate the insured for covered losses. So there are three common types of insurance: the life insurance, health insurance, and property insurance. So life insurance is a contract between an individual, the policyholder, and an insurance company, the insurer. This contract guarantees a sum of money known as a death benefit to one or more named beneficiaries upon the policyholder's death. In exchange for this promise, the policyholder pays regular premiums to the insurer throughout their lifetime. So there are types of life insurance. First, term life insurance. It is to provide coverage for a specific period, typically 10, 15, 20, or 30 years. It offers a death benefit to beneficiaries if the insured dies during the term. It is generally more affordable than permanent life insurance, but it does not build cash value. Next is whole life insurance. It offers lifelong coverage with premiums payable until the insured is dead. It builds cash value which can be accessed by the policyholder or used to pay premiums. And last is the universal life insurance. Similar to whole life insurance but with flexible premiums and cash value account that grows based on the insurance company's chosen rate. So these are the top life insurance in the Philippines: the Sun Life Financial Insurance, the AIE Insurance, and the ProLife UK Insurance.
Health insurance is a protection plan that helps you pay for medical expenses when your feet are small. It's like having a safety net for your health, which means kung nakuha hospital bills, naa si health insurance na makatama sa inyo para ma-cover inyong expenses o para sa hindi na makapag-lima ang kanilang pagpapayag. There are three types of health insurance. The first one is health maintenance or nutrition. Isang klase sa health insurance na nakafocus sa paghatang o servisyo sa kailangan na ano sa usaha or sa mga doktor, hospital, o uman pa mga healthcare provider. The second one is preferred provider or non-insurance. Naghatang o mas nabang flexibility o kapilian sa mga doktor o hospital kung dili nila kanyan o referral para sa espesyalist. Ang non-insurance lang ay medyo mas mahal ang premium o ang mga mayanon kung magpili ang provider na wala sa doktor. And the last one is government sponsor program. Naghatang o suporta sa mga tao na anunan financial problem para makahatang o access sa medical services o health insurance para sa sila.
So these are the examples for health insurance: PhilHealth, MaxiCare, and Healthway.
My topic today is all about property insurance. So, all of our property insurance is usang kaklase nga insurance nga naghatag og protection sa mga butang sa imong balay o personal nga gamit. Kini nga insurance is nagatabang sa pagbayad sa mga gastos kung ang imong property maapektuhan sa mga katalagman sama sa sunog, baha, o pagkawat. Ang pagbayad sa insurance dako kayo katabang labi na kung unexpected nga mahitabo sa imong panimalay. So there are three different types of property insurance. First is homeowners insurance, second is renters insurance, and third is commercial insurance. First is homeowners insurance. Ang homeowners insurance kay usa ka policy nga nagtabang sa pagbayad sa mga gasto sa pag-ayog o pag-ilis sa imong balay ug mga butang kung kini madaot o makawat. O naghatag sa protection sa financial kung naay masangdan naa sa imong property. So ang second is renter insurance. Ang renter insurance kay protection sa imong mga belongings. For example, ang imong girintahan nga apartment ikawatan o ang imong laptop nga ikawat. Ang renters insurance dayon ang magtabang sa mawala nga. Lastly is commercial insurance. Ang commercial property insurance kay insurance nga nagpamalipod sa property o sa mga assets nga negosyo sama sa sunog, kawat o bagyo. Nagatabang aron magsiguro nga mabawi ang negosyo gikan sa mga unexpected nga papanghitabo.
So these are the companies that cater property insurance in the Philippines, which are the AXA Insurance Company and the Mafre Insurance Company.
Next is evaluating your insurance needs. Evaluating your insurance needs is important for several reasons. First, life changes like getting married, having children, or starting a new job can affect how much insurance you need. Insurance acts as a safety net It helps cover unexpected costs that can arise from accidents, illnesses, or damage to your property. By having the right insurance, you can avoid financial stress during tough times. If your concern is about age and health are primary determinants for insurance needs and premiums. Younger individuals typically have lower premiums because they pose a lower risk of illnesses or mortality. This makes a good time to secure life insurance or investment-linked plans such as variable unit-linked or VUL policies, which combine life insurance and saving futures. On the other hand, older individuals may face higher premiums and more limited coverage options. Health status is equally important. Those with pre-existing conditions may need specific health insurance plans tailored to their needs, such as senior health insurance from providers like Pacific Cross or additional health coverage. Next is family status. Family status determines the level of financial protection needed. Single individuals with no dependents often prioritize personal accidents coverage or basic health insurance to cover unexpected medical expenses. Married individuals, particularly those with children, need life insurance to ensure their family's future. For instance, term life insurance or whole life policies can provide funds for dependents' education or daily expenses. Those supporting elderly parents may consider long-term care insurance for dependents or health insurance with extensive coverage for illness common in older age. Occupation. Your job also impacts your insurance needs. High-risk occupations such as construction workers, miners, or seafarers require personal accidents insurance to cover workplace risk. Insurance like Sun Life and Asia Philippines offer policies suited for various job types. Assets and liabilities dictate the type of financial protection required. Those with significant assets such as homes or vehicles should protect their investment with property insurance or comprehensive vehicle insurance. For individuals with large liabilities such as loans or mortgage, term life insurance or mortgage redemption insurance ensures that debt are settled if something happens to the policymaker. Insurance from companies like Pioneer or Malayan Insurance is often used for property and liability coverage in the Philippines. Risk tolerance. Risk tolerance refers to an individual's comfort level with uncertain outcomes. Those with a low tolerance for risk typically prefer guaranteed insurance plans such as whole life or the endowment policies, which offer fixed benefits and financial security. Individuals with higher risk tolerance may opt for investment-linked policies like variable universal life or VUL plans. These policies provide both life insurance coverage and an opportunity to grow wealth through investments. Compare insurance plans. Selecting the right insurance involves comparing policies across different providers. Factors like premiums, coverage limits, inclusions, waiting periods, and additional riders should be reviewed. Tools like MoneyMax.ph and Goober can simplify the process by providing side-by-side comparisons of available plans. Consult with insurance agents. Insurance agents play an important role in helping individuals negotiate complex policies and make insurance to their needs. Agents can explain terms and benefits, provide insights into suitable riders and assets with claims process. Reputable providers in the Philippines such as Sun Life, Asia Philippines, and MaxiCare offer professional consultations services to help individuals make informed decisions. Consulting with an agent ensures clarity, especially for first-time buyers, and helps align policies with long-term financial goals.
Next topic is risk management. It involves identifying, assessing, and controlling these potential threats to your financial stability. It is a proactive approach to minimizing the impact of unexpected events on your finances. So there are forms of risk protection. First is risk avoidance. This involves completely avoiding activities or situations that could lead to a specific risk. The goal is to eliminate the risk entirely. Example is a person who is afraid of flying might choose to drive a long distance instead of taking a plane, thus avoiding the risk of a plane crash. Next is risk reduction. This involves taking steps to lessen the likelihood or impact of a risk. The risk still exists, but its potential negative consequences are minimized. Example is driving carefully and defensively reduce the risk of a car accident, or wearing a helmet while riding a bicycle reduce the risk of head injuries. Next is risk transfer. This involves shifting the risk to another party, typically through insurance or contracts. You don't eliminate the risk, but you transfer the financial burden of dealing with it to someone else. Example, purchasing car insurance transfers the financial risk of an accident to the insurance company. Last but not the least is risk acceptance. This involves acknowledging the existence of a risk and accepting the potential consequences without taking any action to mitigate or transfer it. This is often used when the risk is small or the cost of mitigation is too high. Example is investing in stocks. Choosing to invest in stocks is a form of risk acceptance. You accept the possibility of losses in exchange for the potential for higher returns than less risky investments like savings accounts.